You have been appointed as the junior accountant of Hpl Sand, and one of your duties includes the drafting of the bank reconciliations. You are provided with the following information. They give you a lot of information, and then it's required from you to calculate what the balance of the general ledger bank account was on 28 February 2014, and very important, before commencing with the bank reconciliation. So that means everything that happened on the bank statement that you were not aware of, you haven't posted as yet. They want to know what that balance was on your cash book account or bank ledger account. Good, so let's start then here. And they say that the official bank statement that you received for the month ended 28 February 2014 was already emailed to you on 26 February. The last entry on this bank statement was dated 25 February 2014, after which the balance of 24,100 favorable is being shown at. According to the online bank statement, the balance on 28 February 2014, according to the bank, is 23,000 favorable. So which one of the two do I use? Guys, I'm busy with my bank account on the 28th of February, just before the bank reconciliation is started. So obviously I want to have, and I'm going to work with the latest balance as per the bank statement. So I'm going to start then balance as per bank statement, 23,000 Rand. Now remember what I'm trying to do here. I'm not trying to do a bank reconciliation. I'm trying to figure out what was the balance of my bank ledger account before any adjustment entries were made for the month. Now the bank statement shows that interest of 95 Rand was earned and on a favorable balance, and that bank charges for the month amounted to 300 Rand. I say again, what I want to do is I want to calculate what was the balance of my bank account before any of these items went through. Now obviously that interest of 95 Rand is included in the 23,000 at 28 February. And the same thing applied to the bank charges of 300 Rand. So the first thing that I want to do is I want to start off with a bank statement balance that exclude these items. So this is interest earned, so it's interest received. So obviously it made that balance more. So if I want to eliminate that, I'm going to take it out of the 23,000 Rand. Bank charges, that made that balance less. So if I want to eliminate that, I'm going to add it back to the 23,000. So 23,000 less the interest of 95 plus the bank charges of 300 Rand. Then I'm sitting with a bank statement balance which reflects those items that I still have to process on my side. So that will be the balance of the bank statement before those items were supposed to be passed. The following debit orders are shown on the bank statement. Now, debit orders is a payment that went through your bank account. So obviously that is also something that you will account for after you've received your bank statement, and they want to know what the balance is of your ledger account before any such adjustment entries were passed. So internet usage charges, 900 Rand. Again, what did it do to the bank statement balance? It reduced it, so I'm obviously going to add it back. Payment regarding a loan from the bank, 8,000 Rand. So basically I have to add that back as well, so that I eliminate those two items from my bank statement. Debit orders, the internet charges, and the loan, I'm going to add it back, because if those items did not go through my bank statement balance would have been more. The bank statement shows that 5,000 Rand was deposited in the bank account with regard to a load of sand that was sold and already delivered to the client. The cash book does not show this transaction. Now, that must have been a direct deposit. Again, they want the cash book balance before I'm going to make any adjustment entries. So therefore, I want to remove that out of my bank statement because it increased my bank statement balance with 5,000 Rand. So I'm going to take it out of that deposit to the cash book, 5,000 Rand. The cash book shows that a payment of 7,800 has already been made to JJ Transport. The amount does not appear on the February bank statement. Okay, after further investigation, it was found that an electronic payment was made on 15 February, but that it was scheduled to only be transferred to JJ on the 1st of March. So now we have something slightly different. What happened is that we have passed an entry in our cash book, which has obviously not yet been presented on our bank statement. Now, if that entry has already been passed on our cash book and they want the general ledger balance of the cash book in the GL, then it means that I have to adjust my bank statement balance in order to reflect that. So that is a payment made of 7,800 Rand in my cash book. So if I want to do the same to the bank statement balance, I have to deduct the 7,800 Rand as if that payment has already gone through my bank. The telephone bill for January 2014, as per the January cash book, so it's already in the January cash book, was paid by means of an EFT. Guys, when does the EFT go through your bank account? On the date that you've done the EFT. So it went through the bank account on the 3rd of Feb. Was there any outstanding amounts then, reconciling amounts? No. I've passed it in my cash book in January. It went through the bank account in early February, but both sides it went through, so it has no impact on neither balance of the bank statement or the cash, or differences in balance between the cash book balance and the bank statement balance. Okay, that amount was 550 Rand, which is just coincidental. The bill for February, however, was recorded in the cash book on 24th February and paid per check. So now a check takes its time. When will a check go through my bank account? When the third party presents the check for payment at the bank. So at 28th February, the check was still not cashed by Telkom. So already we have already recorded that check in our cash book, but it hasn't gone through our bank statement. Now, if we want to work from the bank statement balance to a balance which was reflected in the cash book, we will now have to deduct that, not the 7,800, that is the previous one, the 560 Rand from our bank statement balance as if it was presented for payment as well. So there's the outstanding check to Telkom, 560 Rand. If that really goes through the bank account, my bank statement balance would have been 560 Rand less. And that's the end of the story. There were a number of other differences as of 25 February, but we are working on the 28th of February, so we have probably identified a number of them already. So our balance as per the cash book before any of these adjusting entries went through was 18,745. Now, if we're going to pass the entries in our books, it means that we will start off our cash book balance with a balance of 18,745. Then we will recognize the interest on the debit side, the bank charges on the credit side, the debit orders on the credit side. That one is already in there, so we're not going to do that. Then this one is already in there. We're not going to do any transactions for that in our bank account. And the 560 is already in our bank account as well. So that means that our bank account will then be updated to an after reconciliation figure. But the question wants a before reconciliation figure, so they want 18,745.